As you can see, pretty much a mixed picture on the top 40 front, and mostly dragged down by some of the platinum miners, gold miners also coming under pressure in today's session, but a fair game today, I would say. We're up around 1%, significantly underperforming what we're seeing in Germany and Eurozone as a whole.
Yes, I think we obviously didn't, we've corrected as well, but I think some of the European markets have taken the big hit. And now investors, it's got to the point where they're saying, well, you know, let's be rational about this. When you have a company like BHP Billiton trading at a PE of 6 yesterday, even with commodity prices that look uncertain going forward, you've got to think, wow, this is a great time to buy a quality company like that. So I think some of the resources companies are making a bit of a comeback, and then we've also seen at the close today RMB Holdings and perhaps one or two of the banks looking quite attractive at the moment.
Yeah, well, I know that Investec is actually your pick, and I think Standard Bank as well, if I'm not mistaken.
Yes.
Investec under pressure today, down around 0.7% on the limited side, and on the PLC side, shedding around 0.25%. Tell us why you're favouring Investec at this point.
Investec and the banks, I think basically what I did is I just looked at how earnings over the last 5 years have behaved, and obviously they peaked in 2008. I think Standard Bank earnings peaked in 2008, and then we've had 2 years of decline. Things have leveled out, and I think Investec's probably been beaten down quite a bit because it has operations in the UK. So I think on a 5-year view or longer that we're getting close to, if not near, the bottom of the cycle for the banking stocks. They are of course essential for economies to function. So my bet is that Stephen Kossef and the management team at Investec,
and of course another acquisition in fact in the UK recently as well, so
yes,
within the investment banking space.
Yes, in the investment banking space, but I'm just looking at the way they manage their capital and how they've fortified their balance sheet, and I think that they will come through this crisis stronger than ever before, and ready to compete and go and win market share when markets return.
With regards to the resource space, you mentioned BHP Billiton. Is this your preferred pick within the resource space? And does Anglo American fall part of this as well? I mean, two diversified miners, and some investors believe you should have both in your portfolio. Others favour BHP or Anglo. Which camp do you fall in?
I think from a valuation perspective, Anglo looked the most attractive recently, but I really can't speak more highly of a company like BHP Billiton. I think they're probably one of the best, probably the best managed resources company in the world. And under the leadership of Marius Kloppers, I would put my money on him creating in the next 5 years maybe one of the most profitable companies in the world. Just looking at the Fortune 500 stats that came out recently, I ranked BHP on profits, and I think it was 32nd in the world overall on profits on the last set of numbers.
Why is it only trading at 220 Rand though? And it's up 3.5%.
It's a good question.
Yeah.
Obviously, investors are very pessimistic about where commodity prices are going forward. Iron ore being one of them, and BHP Billiton's iron ore is a big component of its earnings. So I think that is where the pessimism sort of lies. But I mean, it's ridiculous. You could buy BHP yesterday, as I mentioned, at a PE of six times, which is in line with most burger joints and restaurants that you'd buy in Joburg at a PE of five times. So.
And with regards to African Rainbow Minerals, also having a strong day today, up 3.2%, 170 Rand a share. Would you delve into a company which is very South African focused?
Yes, I think this is a little gem of a company in South Africa. It's a little diversified miner. It's got a portfolio of great assets that can scale up, that they're busy expanding. And it's been a pick of the fund managers I've spoken to lately. They love ARM. So I think even at $170, it's a great buy.
Lonmin, interesting news out this week. Of course, the Shanduka Group interested in the Limpopo's troubled assets. Around 1.1 billion Rand is what the deal could be worth. What is your sense on the story?
I was quite surprised. I thought that Lonmin have done well here because they're now getting a very, very established and well-known black economic empowerment partner on board in the form of Shanduka Resources. But in terms of the assets that they're taking over there in Palabora, in the northern limb of the platinum bearing assets there, I think it's a very tough ask in that particular mine, and some great reaction from the guys at Mining Mix that said that listen, this mine is one of the highest in the industry, if not the highest, from a cost perspective, trying to get this right. Lonmin had a crack at the apple in 2008 under the previous CEO, and now Ian Farmer has been able to pass this asset on to Shanduka, which I thought was quite surprising. So at this point in time, I'd say that Lonmin's the smart money in this deal, and I'll be very surprised to see how Shanduka operate this asset.
Okay, with regards to US unemployment, it is of course the big theme this week, especially if you look abroad. We had the ADP numbers surprising to the upside. In fact, more jobs created in the private sector than initially expected. Do you think that unemployment in the US is going to remain sticky, and therefore negative sentiment is going to continue to emanate into all the emerging markets as well?
Yes, I mean, I think the point in the States is that the housing sector, which comprises not only construction, but real estate agents and a whole lot of industries related to the housing crisis, is still very much at depression levels. And so, as Warren Buffett pointed out in the interview he did yesterday, at one point at the peak in 2008, the American economy is creating about a million households. And the construction industry, or the housing industry at the time, was creating 2 million houses. So there was surplus of about 1 million units. That situation's obviously reversed post the crisis, and they now reckon that they're actually constructing or making 500,000 houses a year, units available. But the point he made was that until that surplus has been worked off, which will take in the region of 2 to 3 years, you're not going to see any meaningful employment in that housing and the housing related sector. And those are very labor intensive parts of the American economy. So it was great to see the private sector numbers today. A lot of that's been driven by small businesses that are now investing and growing. But until you see a major industry like the housing industry start to move into a situation where more people are employed and they go back to their sort of optimal output, then I think that employment in the US is going to remain quite a problem for a while.
To see unemployment start to rectify itself, we really need to see a recovery within the housing sector. That's basically it, right?
Yes, yes.